Hello, welcome back! A few hours ago I made a video about Netflix, in which one I talked about how Netflix is overvalued and I actually showed you the numbers there and why I think so. And unfortunately, after hours right now, after the earnings were reported, the stock price is down at $266, down 24% from its two-day highs. And so I was looking to get some more news about what happened in terms of the earnings, and so I look at my stock news module here, and you will see that Netflix is bleeding subscribers for the first time in over a decade, and it's expecting to lose another 2 million subscribers in coming months. And you will see that the subscribers sink for first time and it's expected to get worse. All sorts of news pieces that are interesting. I'm gonna click on this one and take a look at this here. Netflix subscribers shrink for first time in a decade and is expected to get worse, as stock plunges more than 20% right now. Let's see what happened here. So Netflix executives mentioned that after a loss of 200,000 subscribers in the first quarter, it will probably grow to a loss of 2 million in the second quarter. So the company is losing a substantial amount of subscribers actually, and revenue growth seems to be considerably slowing down. What's going on here in terms of the actual status of Netflix? You will see that Netflix actually increased their prices in the US and Canada over here. And that actually did result, and that's normal to result in losing subscribers, because people will have other options as well. They can use like Disney, they can use HBO, or they can just not use anything. I mean, it's not like they have to have some sort of a streaming service. And especially with rising prices, inflation and all that, people are getting more cautious about spending money, and so these kind of services could get a little bit of a hit. And so, shares are actually plunging right now. And Netflix actually reported earnings of 1.6 billion or 3.553 a share, which is down from 3.75 a share a year ago. And when Netflix actually revealed that they are probably going to be having some drawbacks in the next few quarters. And so things are not looking great for the company. Now, as you will see here, the subscriber forecast was not the only forecast miss. They expected revenue to grow to 8.05 billion from 7.34 in the second quarter a year ago, coming up short of analysts' average estimates of 8.22 billion. And the interesting thing here, what the Netflix executives are saying in a letter to stockholders, shareholders, revenue growth has slowed considerably as our results and forecast below show. Streaming is winning over linear, as we predicted, and Netflix titles are very popular globally. However, a relatively high household penetration, when including the large number of household sharing accounts combined with competition, is creating revenue growth headwinds. And at some point I was hearing about Netflix wanting to limit the number of household sharing accounts, and that's probably coming up next, I'm sure. Although they will have to think about it, because more people could be leaving the service if that is the case. So they do have their headwinds here, and things could be looking dire, at least in the short term. So yeah, Netflix stock actually declined 37-38% in the first quarter. Worst performance for the stock since it was still being pummeled by the Quickster debacle in 2012. And yeah, it looks like it's, the company has been having some issues right now. Disappointing news about Netflix. And if you are a shareholder right now and you have bought in the company when it was actually much higher in stock price, this news can be a little bit disappointing, or very disappointing really. And as you'll see here, the access to original content, that's the reasons why consumers subscribe to streaming services. Access to original content, broad array of content, and the reason they are cancelling these services is cost, price increases, and lack of new content. The thing is, there is additional cost. The price has increased, at least in the US and Canada. And lately, the lack of content could also be a thing, because I don't think, after a few hits, I think Netflix has been a little bit stale lately. So that's another thing. And so this is why I wanted to make the video, just to let you know about what has happened with Netflix. And if you haven't watched the video that I made earlier, you can actually see how Netflix is actually right now super overvalued, even at this price over here. Now, if I remember correctly, when I made the video, the price that I would want to buy Netflix at would be near $100 if I were to buy it, if I would actually think about buying it. And so even now, being down 25% as it is, I wouldn't think about picking up Netflix because it's still overvalued based on my estimates and financials. And if you are interested in taking a look at why this is overvalued still, take a look at the video that I made here. I'm gonna leave a link in this video. You can find it on your top right. And before you do that, please remember to leave a like and subscribe to the channel, because I'm making content every day, and eventually I will let you know how to get access to this tool as well. So in the meantime, yeah, take a look at this video just to see how the discounted cash flow model and all the analysis that we're doing here can actually really help you identify this kind of potential pitfalls for your investments. And thank you for watching this one again. I'll see you soon. Bye bye.